Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from MPIinvest.com. So, talking about the markets yesterday to talk first, of course, which is the most important thing, which I'm sure all of you would be waiting for, is why did the market crash? Well, it was the biggest single day fall in the Indian market since October 2023. And of course, I would say the way it gapped up and went close to 21,600. From there, a major fall bringing to 21,150. That's the huge fall that we saw yesterday in the market. Now, what are the things that triggered is something that everybody is talking about. Now, if you look at media, everybody says multiple reasons. One says the corona, because now there are few news cases reported in Kerala, and then that is creating it. Then there is, of course, the Red Sea issue that some people are talking about. And then, of course, then other things that they can talk about is, of course, the markets have been overbought. Technically, people say it is in the overbought zone, so it needs a correction. And these are all kind of things that's the reasons that being talked about. So let me share my view. Now there is no hard and fast rule that this is correct or that is correct. So if you see, one of the most important thing, if you look at yesterday, uh, there was a major profit booking scenario. So if you look at the DIA and FIA transaction yesterday, interestingly, the FIAs have sold for about just 1,000 crores net, and the DIAs have bought for about 4,000 crores. So it was net buying of 3,000 crores. So then why did the market fall? That's the question, right? Now let's look at the top losers of the day yesterday. It was Adani Enterprises, Tata Steel, Adani Port. So what is connected? Adani Port, okay, can be connected to Red Sea effect. Why Tata Steel and Adani Enterprises? So one of the most important thing is there is something cooking up, which probably we are not aware. That could be one. And second analysis that I can say from here, it is if you look at the FI and DI transactions today, though the net in FI in institutional buying, net 3,000 crores of institutional buying happened, which was majorly attributed to 4,000 crore buying by the DIAs. But then, why didn't the market fall? So the major effect of the market, I mean, what I can say is everybody, of course, was in a mind. I mean, tell me, how many of you who are sitting with amazing profit on your investment were thinking of booking some partial profit? Now, if you see what happened the first half the market was just falling slightly, but then second half people would have just decided, okay, markets have fallen so big, and then start booking profit. So there has been a huge transaction that happened in the market yesterday, both in DIAs as well as FIA transaction. Though the net number shows very small, but in the day there was a huge transaction. In fact, if you just look at the FIA data as we speak, one thing that you can observe is yesterday the buy value by DIS was 16,000 crores and the sell value was 11,400 crores. So net buying of 4,754 crores. If you look at FIIs, they were even big. They bought for 19,000 crores and sold for 20,000 crores. So the end number looked actually different, very small to you, but there has been a huge transfer. So basically, what I am seeing is a huge transfer of fund. Now, one thing that probably I can analyze at this point of time, Adani Enterprises had kind of really rolled up, after the recent up move. So many people probably who were stuck with the money there could have tried to book profit earlier. That could be one. But then the huge FII sell value of 20,000 crore, where it has it happened, is something that we need to see, because Reliance and SDFC did fall, but not a big number to be taking the markets this far. I mean, this down. So one thing is clear. This is kind of normal in the market. Is there anything to be worried? Definitely not COVID, because let me tell you, with my experience in the market, the stock market will not react to something which has already happened earlier. Like COVID was something which is already known. So this was not for that. Now the markets were at the peak, so there has to be some reason. People were just finding reason to book a profit, and that has happened yesterday. So that really need not worry. Now at this point of time, after Indian markets closed, US markets also opened. They were also kind of trading flat. They also closed, but they again closed more than 500 points down. Dow was down by more than 500 points. So US markets have also closed down. So there also the markets were kind of overbought zone. So though I am not a technical person, but yes, some correction is required, and that has kind of happened. But interestingly, yesterday the European markets were still in the green and strong. So it's very important to understand that the reason as of now is not really clear to anyone, but then these could be the probable effects on the market at this point of time. So if this is the case, what could be expected for today? That's the big question. Now today is the weekly expiry, and that is of course going to add to the volatility. And as we discussed earlier, this is time that the institutions also, especially the FIIs, go on a vacation as New Year and Christmas comes. So before that, probably there was some huge transaction which was done, but again the stock part is something which is not clear. But I don't see any fundamentally a reason why the market should fall further. But however, because of the technical reason, and I mean especially in India with so many retailers joining the bandwagon, and a lot of or most of the retailers actually looking at technical rather than fundamental, and most of them looking at short term rather than large long term, might see some fluctuations in the market. But then I am looking at it as a opportunity to invest in the market for those who missed out the rally. But again, don't do it in one shot, SIP mode. That is first thing. Now coming to next part for short-term traders, including me. Of course, I had this was I'm more of a non-directional trader, you know that. So naturally, yesterday was a bad day for me, and I did book some losses yesterday, and I have few positions which are also in losses. As long as market doesn't see some recovery, I might go into further losses today. But that is a part of the market. That is, I mean, that you should not come into trading if you're not ready for this. So that is something which every trader knows how to handle. So for the retailers, yes, it might be a big issue, but for a trader, this is a common thing. But however, it is much easier to just stay as an investor and not being a trader. So as a investor, first thing that you should do is look at your equity exposure. Now, second thing, should you have book profit? Now, if you remember, whenever the markets were at the peak, I have told only one thing is depending on your portfolio. So, if you're a trader, of course, some traders what they do is we pledge and take some fund to trade. So, or some people some people take buy some stock based on the pledge funds. So, such things should be cleared. The pledge should be cleared when the markets are at the peak. So this is what I have told always, not to completely come out of the market. Whereas, for example, if you see my SIP investments are all untouched. SIP still continues when the markets were at peak, and even now when it is falling also it continues. So that is your carrier for your fund long-term investment. Whereas your trading, which is a short-term income generator, that would be working in a different manner. So in a short-term income generator, we would generally book some partial profit, which I have done already. In fact, in my income generator portion, which is the stock market, about 60% of my fund right now is in cash position. That means only 40% is invested. So 60% fund is ready for deployment, which I can deploy at this point of time. But if you look at my SIPs, they just continue. I don't withdraw or partially withdraw or anything, because those are for my long-term goals, which is still much ahead. So if you want to plan your exit from this market, the first thing you need to check, is it your investment or your income generator, trading short term. So if it is your investment for a long term, you really don't have to worry. Just keep your eyes closed and stay invested. Continue to invest more at every dip. Now, if you are a short term trader, then that fund you should have booked partial profit when I told you, not at this point of time when the markets are falling, right? Third one, if you are pledged, which was something which I always go against, when if you pledge and buy stocks, if you have done that, then get out quickly today. That's very important. So these are three categories which I have addressed to you. So it is not a generic answer I can give you, but It is based on these three categories that I'm telling you, right? So this is a situation, this is a part of the market. I'm absolutely not worried, because whatever small losses I made, I'll recover in the next few months. That's clear. But then yes, your risk management is the key in trading. And as far as investing is concerned, being in the market is the key to be successful. So stay invested, continue to invest, look at dips as an opportunity to invest, and that should take care of your money and make your money big. So that's it for now. This is Sringadan signing off, wishing you all a great day and a great week ahead. Goodbye. See you tomorrow with more details.